All right, so gold held its own on Friday, and I want to talk a little bit about its relationship with some of the behaviors that we saw on Friday in another asset class, primarily the foreign exchange markets, because we saw some characteristics within the foreign exchange markets that we also saw within commodities and specifically within precious metals. Now, this divergence is looking pretty interesting. And before we get into that, please hit that subscribe button down below so you don't miss any episodes coming up. And if you're new to the channel, please hit the like button to make sure this video gets out to more and more people so they stay abreast with gold and silver news and bring more people into the fold. Okay, so let's talk about gold here because gold did something pretty interesting on Friday, whereas almost every other commodity pretty much had a red day, a down day. Gold did not. In fact, it actually ascended pretty high. It had some nice highs on the day, and it did end lower, but it did not end in the red. In fact, it actually did better than the day prior, so it ended green, and it actually ended above that trend line that was already established weeks ago. So again, some nice, strong movements in the face of, danger. Now, we didn't just see this safe haven behavior apply just to metals. We also saw it apply to the foreign exchange markets. Now, some did ask an interesting question on Friday on Twitter. And again, I saw this on Twitter. I was tweeting about all this stuff on Friday. I didn't have my computer with me because I was traveling. So it helps to follow me on Twitter, which is investing with TJ, all one word. And I basically saw some people asking about what was going on with the DXY. Why did the DXY sell off? You would expect that more money would flow into the DXY. Well, the thing about the DXY, and you can actually see it here, is it grew pretty aggressively over the course of the last several days. And to even give you a better look into this, I'm going to pull up the some indicators here. I apologize for this. My mouse is acting kind of wonky here. But as you can see here, it was already on a nice, strong, bullish run, and it's in overbought territory. I mean, just take a look at where it is on the MACD. So it actually lost some steam relative to others getting inflows. And by others, I mean other safe haven currencies. Which ones were those other safe haven currencies? Well, it was the Japanese yen and the Swiss franc. And it wasn't just the Japanese yen and the Swiss franc. It was the Japanese yen relative to the US dollar. It was the Swiss franc relative to the US dollar. So let's take a look at that. Now you're going to see it look like it's in the red, but really this is just showing that $1 now buys less Japanese yen, meaning that more money has flown into the Japanese yen and money has actually flown out of the US dollar. So before we saw that, $1 could buy, 114.85 on this day, about 115. Now $1 can only buy 113. So a lot of money flew out of the US dollar into the Japanese yen. Again, a safe haven play right there, displaying magnitude of preference for the Japanese yen and also preference for the Swiss franc. Same thing. The US dollar was doing pretty well. And then on that day, people preferred to go into the Swiss franc. Now you may say, well, why did they do that? Why go into the Swiss franc? Well, you have to think about it through the lens of money managers and people looking to seek yield. The crowded play is already done. The crowded play, what is the risk reward there? You know that you're going to get some kind of return. And because of that, it probably won't be that great of a return. But the undercrowded play that follows the same thesis may actually give you a stronger return. And that's pretty much what we saw on Friday. If you stayed in the US dollar, you actually lost money as far as the safe haven play. If you went into the US dollar, or if you went into the Swiss franc against the US dollar, you probably made a significant amount. If you went to the Japanese yen against the US dollar, you made a significant amount. So again, this was a safe haven story. And if we also take a look at some of the, let's scroll up here, some of the commodities that pretty much are tied to growth, they did pretty poorly. As you can see here, oil went down 12%, wood down 1.5%, copper down 3.6%. Silver, again, is now, tied to that, has that industrial story, down 1.9%. Gold was up 0.17%. So this is pretty interesting when you take note of what exactly, or when you take note of the fact that some people like to count gold out and say it's boring. Well, at the end of the day, did, having exposure to gold on Friday save you if you have like a, pretty short term view? And you can say, yeah, it did. Now, let's also take a look at safe havens relative to the South African rand. So again, here's another look at what we saw through the lens of foreign exchange markets. The Swiss franc really hammered against the South African rand. Japanese yen really hammered against the South African rand on Friday. So again, for those people who would even think that, oh, that variant had nothing to do with any of the price action that we saw on Friday, I'd say that you're insane, because not only do we see these movements happening here in foreign exchange markets with differences in preference for safe havens, you're also seeing the differences in preferences of safe havens versus, a currency that, by all intents and purposes, I mean, let's be honest about it. It does its thing, but it's not a part of the global conversation when it comes to, currencies that people want exposure to. And you just had safe havens really perform well against them. Now, let's also talk about some other risk assets that I know gets a little bit controversial on this channel, but we've been seeing Bitcoin do really poorly over the last few days. And here's Ethereum. Ethereum, people were expecting to break out relative to Bitcoin in the last several days, but Ethereum has also been following the same pattern, unfortunately, as Bitcoin. Now, as you can see here, we're down at 54,000, which is definitely less than the 67,000. I think we even got up to like 69,000. I can't remember, but we got down pretty low. But let's take a look at Bitcoin in the moving averages, because something interesting is developing here. Bitcoin looks like it's about to have an interesting cross here, and it's not a death cross, but the 20-day is about to cross below the 60-day. So it's definitely bearish. It's not a death cross, but it's definitely bearish. Let's take a look at Ethereum. Ethereum isn't as bad yet, but it's getting there. So again, a lot of people compare gold with Bitcoin as far as which one is the better safe haven. I think honestly, on a day like yesterday where it really counts, or a day like on Friday where it really counts, I think we know which one is the better performer as far as a safe haven is concerned. So guys, let me know what you think about this in the comment section below. Thanks again for watching. Please hit that like button and please subscribe if you're new. And it's Investing with TJ.